Hello everyone! Today, I'd like to talk about Kioxia's share price plunge and what it reveals about overconfidence. If you live outside Japan, you may not know the company. Kioxia is a Japanese semiconductor maker best known for NAND flash memory. That is the storage technology used in smartphones, solid-state drives, and data centers. As excitement around AI infrastructure grew, expectations for memory demand rose with it. Kioxia's stock climbed at extraordinary speed. At one point, its market capitalization even surpassed Toyota's. For a moment, a flash memory producer became Japan's most valuable listed company. That was astonishing. It was also when I began to feel that something did not quite add up. The AI market will probably continue to grow. That part of the story is not absurd. But could a component supplier remain more valuable than Toyota for the long term? Perhaps, still, the story had begun to look a little too convenient. I suspect many buyers also felt that the stock might already be too expensive. But during a rising market, one sentence is remarkably persuasive. Yes, it is expensive, but it will rise just a little more. And then comes the dangerous part. I will manage to sell before the crash. Most people do not need to believe that an overheated asset is cheap. They only need to believe that someone slower will still be there when they decide to leave. Then Kioxia's share price plunged, and the reactions online changed almost instantly. On the way up, profits proved intelligence, research, and good instincts. On the way down, the explanations became manipulation, short sellers, institutional investors, or the company itself. When we win, we take the credit. When we lose, someone else gets the blame. Psychologists call part of this overconfidence bias. We tend to overestimate both our ability and the accuracy of our judgment. I smiled at the contradiction and then realized that engineers do a version of the same thing. We spend years solving problems that many other people cannot solve. We learn difficult terminology. We understand complex systems. We notice failures that others miss. Over time, technical expertise can turn into a much broader belief. I am better at judging things than most people. But reading code accurately does not mean that we read people accurately. And knowing one field deeply does not protect us from hype, stubbornness, or attachment to our own designs. I do invest in stocks, but I stay away from individual companies. I invest surplus cash in index funds and mostly leave it alone. It will not make me rich overnight. It is also less likely to let leverage trading destroy my life overnight. For me, it is closer to savings that are less vulnerable to inflation. This is not a claim that index investors are wiser people. It is simply a structure that asks less of my ability to predict the future. I sometimes catch myself assuming that I must be at least a little smarter than average. That thought may be exactly when overconfidence is doing its best work. So perhaps the safer position is to leave open the possibility that my judgment is ordinary or even below average. If I am wrong, I merely become more cautious. If I am right, I have corrected a dangerous mistake. Of course, the moment I feel proud of being unusually humble, overconfidence has already found another door. The goal is not to defeat human nature. It is to build decisions that do not depend on believing we have defeated it. Thank you for listening.